It's been almost 2 decades since we started our journey to educate and help you take action so you may better manage your financial future. Our goal is to help you accomplish your life's purpose. This podcast reveals financial tips, strategies, and insights that will help you to set your financial goals and guide you along the way. This is Managing Your Financial Future, brought to you by the advisors at Lucia Capital Group. We are Managing Your Financial Future. Johnny Dean, your podcast host, not an advisor, but here with the advisor, Professor Rick Plum, certified financial planner, professional, longtime advisor, longtime person here at Lucia Capital Group, at least a couple of decades. I always forget when you start because I know we started the show before you came on board back in the early 90s.
I'm in my 28th year.
28th year. So, yeah, all right. So it was just a few years. I'm about 30 years associated with it, and 20 years kind of actually, 22 years actually, right?
Part of it.
Part of it, yes, exactly. But at any rate, we're here and talking about some of your favorite topics. I mentioned this toward the end of the show last week that we were going to get into something that is probably our most commonly asked topic, I guess. Would you call Social Security the most commonly asked topic among clients, or is it?
It's a very common question, and it's one of the most misunderstood with the changes that they made a couple years back. It's been, what was that, 2014 they made the last changes? It seems like it was just yesterday when they made the changes.
14 or 15, was it?
Back in there, but
yeah.
But every once in a while they'll make some dramatic changes, and it takes about a decade for people to
get caught up. Well, it's funny because I was in I was at a reunion of some radio folks on Sunday, and one of them got talking about Social Security, and she says, "Well, I can't start collecting mine, I guess, till I'm 70." And I said, "What are you talking about?" She says, "Well, that's my retirement date." And I didn't explain it all, but it occurred to me that there are some basics that people don't necessarily understand about Social Security, and I thought we would cover some of those in this particular podcast today. Now, a couple of months back, I think it was the middle of July, we did a podcast on when the question I think was, when's a good time to take social, or when should I take my Social Security benefits? Now,
that's the most common question.
That's the most common question, but it's also one that's unique to everybody. It's
right. It has a lot of factors involved, whether you're single, whether you're married, your age, if you're married, the age difference between you and your spouse, when you were born. I mean, there's still maybe a few little options that some people have that others don't. Although we're running out of time on those pretty soon.
Yeah.
So, are you working? There's a lot of different factors. How's your health? How's your family health and longevity?
Do you need the money?
Yeah.
Do you need the money now?
Yeah.
Or do you not need the money, but you just want to take the money right now?
And so how do you feel about, unfortunately, people get wrapped up in how they feel about Social Security's trust fund and the viability of that trust fund.
Yeah, which is a non-issue. Trust me.
Because there is no trust fund.
There is no. It's just numbers on a piece of paper. You can't run out of numbers. Let's put it that way.
Well, they could run out of ink.
Well, I suppose, but you just run over to Staples and grab some, and then
that was easy.
You got it. You got it.
They should pay us for that.
I know. That's right. Can I get a sponsor? We're going to get another sponsor on this program. Anyway, so let's go over a couple of these questions. The one that I mentioned a moment ago, where somebody thought they had to wait till they were 70 years old. I don't know where that came from. But when are you eligible? When are people eligible to take? Let's just talk about retirement benefits, because I know there are widow's benefits and disability and all that stuff. Let's just stick with retirement benefits. Okay. Yeah.
And the confusion comes in the fact that the full retirement age is changing. And we're in the middle of a phasing up from age 66 to age 67 of your full retirement age. So that's a little bit confusing. But no matter when you were born, it doesn't matter what your full retirement age is. If you're not working, you can start collecting Social Security retirement benefits as early as age 62. Or you can delay. Well, you can delay forever and never take it if you don't want to, but that would be stupid. But you can delay and get an increase in your benefit all the way up until age 70. The full retirement age, which is currently, it was 66, now it's going up to 66 in 2 months, 66 4 months, and all the way up to 67 for those people born in 1960 and later. That's changing. Now, that has to do with when you get the formula without any increases or decreases. When the Social Security benefit is calculated without an early retirement decrease or a delayed retirement credit. And so it's just a matter of when are they going to calculate your benefit? That's at your full retirement age. And then if you retire before your full retirement age, it's reduced. If you retire, or if you start collecting, I should say, after your full retirement age, it's increased. And it's done on a per month basis. It's not done on an annual basis. It's done on a per month.
So the longer each month you wait to take your Social Security, you get a tiny bump in your
2/3% if you're going from your full retirement age up.
Yeah.
And so you don't have to wait the entire year to get the 8%. It's each month as a small increase.
Now, if you were born before 1938, your full retirement age is 65. If you're born, I had to look this up.
Those people are already receiving their Social Security.
Yes. If you're born between 1938 and 1942, it goes up and so forth.
43 to 54.
Yes, exactly. Now, if you're 66, and if you were born in 1960 or later, your full retirement age is 67.
Right. So somebody who's turning 66 this year, which 2021, if we're going to replay this sometime in the future, what's that? 1955. So that means their full retirement age is 66 in 2 months. Because they're just on the first leading edge of scaling up to the higher number.
Yeah, and ultimately in a few years, everybody's going to be age 67, full retirement age, and who knows, they may mess with it again.
They've talked about rates changing the full retirement age all the way up to age 70 for the younger crowd. Because that gives a smaller benefit in the earlier, if you take it earlier, which will save the trust fund.
Sure, they can somehow run out of money. Nobody's ever explained how they could ever run out of money. But anyway, so you can get it as early as age 62, but of course your benefits will be reduced. Now, the latest you can take it, at least the latest you can take Social Security,
the longest it's going to continue to increase while you delay is age 70.
Okay.
Once you get to age 70, if you don't want to take it, don't take it. But it's, deferring past age 70 is at your detriment. You won't receive the benefit, and it won't grow anymore, at that point, other than cost of living adjustment.
Can I take my Social Security at some point and decide that I should have taken it earlier and apply for missed benefits?
You can apply for missed benefits, but the max that you can apply, unless you can, we're going through this right now with Social Security, unless you can prove that Social Security screwed up and didn't send you the benefit when you applied for it at the earlier date, the most you can apply retroactively is 6 months, assuming you were actually eligible for it for those 6 months. You can't apply at 62 and for 6 months retroactive because you weren't eligible for it.
Yeah.
But if you wanted to, for whatever reason, let's say that you're still working while you're turning 70, and you're saying, you know what, I don't want any benefits this year because I'll just have to pay taxes on them, whatever. And so I'm going to wait until January, February next year to apply and get the 6 months retroactive, and that 6 months retroactive check will come in the following year. I'll pay, and
when my income will be
and
lower,
I can choose to pay taxes or not, depending upon, at that time, it might be a tax savings technique.
So, how are your benefits calculated? Just basically, it's your lifetime earnings where you paid FICA taxes.
Right. They're going to look at all the years that you paid FICA taxes. They're not going to look at the tax necessarily. They're going to look at your earnings for that year. And what they do is they inflation adjust every year of earnings you have prior to turning 60.
So they can go back.
So back in 1980, what were we making? $10, a day. It seemed like whatever it was.
It was about $2.50 an hour.
Let's say you're making $20,000 in $25,000 in 1980. Well, they're not going to use $25,000 in the formula. They're going to adjust it for inflation from 1980 to the year you turn 60.
So it might be 30.
So it probably is more like 70 or 80 right now.
Is that right?
Because some of those years had some pretty high inflation.
Okay, well that's true. That's true.
It's
so they're going to take your years. How many years do they use?
The first thing they do is they inflation adjust all the years, and then they line them up best to worst, highest or worst earning years, and then they just take the top 35. And so if you have more than 35, they're only going to use your 35 best. If you don't have 35 years of work in the Social Security system paying FICA, well, you're going to have some zeros because they're still going to use 35 years, and some of your years are zero.
And that's going to bring down your benefit somewhat.
That's going to bring down your historical average earnings, which brings down your benefit.
you could, I guess, continue to work and try to get 35 if you want to.
And I know people who have, even if they've had 35 years, they start receiving their benefit at 70. I'm just making numbers up. But then they continue to work. And this year's work becomes one of their best 35 years. Maybe they were working at a fairly low-paying job for the majority of their life. They really didn't hit their stride until they got into the late 50s, 60s. And so the later years of earnings are in the current year of earning is significantly higher than some of their earlier years. Well, Social Security automatically goes in and says, once those earnings hit the books,
as in your tax forms get through the system,
then they'll go back and recalculate the benefit, throw out the lesser year, add in this higher year, recalculate the benefit, and they'll send you a check retroactive to the beginning of the year and give you a higher benefit going forward.
Oh, they'll send you a retroactive check.
Yeah, because they don't get it.
They don't see it for a couple of years?
No, it's usually months, not years.
Oh, months.
Anyway, they're doing this towards the end of the year.
Oh, okay.
And so I remember I had somebody come to me and say, I just got this check from Social Security. I don't have any idea what it is. And what do I do with it? It's like, did your benefit increase? Yeah, my benefit increased too. What's going on? I mean, did they?
First of all, don't question it. I'm kidding. But.
And I happen to know the individual. I know he was making at or above the wage base for that year, where some years he didn't. And it was like, don't worry about it. Cash it. Enjoy it. What they did was they automatically adjusted your benefit going forward.
Yeah,
and retroactively to the year that they included it for the year that was worth it.
Also, it's good to know somebody or some computer program is at least keeping track of this. Now, this, by the way, if you want to know how much you aren't retired yet, but you want to know how much you may be getting, Social Security Administration has an online calculator, right?
Right. You can do it two ways. You can either sign up for a My Social Security account, and you can get your paper statement anytime you want it.
Yeah.
Or you can just go to the main page, Social Security Administration, ssa.gov, and just below the pictures, right of center, there's a little button that says Retirement Estimator. And you put in your basic information. You're going to need to know your mother's maiden name, and then some other things. And it will run an estimate based on your historical earnings, and it will take the number that you input as your current earnings and continue that number as future earnings. So it's if you're 50 and you plan on retiring at 66, 67, 70, it's going to work fine. If you're 50 and you're planning on retiring at 55 and you say that you're earning $150,000 a year now, it's going to overestimate your earnings because it's going to continue adding those good years of earnings and all the way up to 62, full retirement age, and 70. It's going to spit out three numbers. What your benefit will be at 62, what your benefit will be at age 60, what is projected to be at full retirement age, and what is projected to be at age 70. But it's going to take those earnings that you put in and assume you have those earnings for every year going forward until that date of the benefit. So what I do is use a very pessimistic, conservative approach to it. I put in my future earnings are zero.
As if you were retaring this year.
As if I didn't have any more earnings.
There's your worst case scenario.
That's what they're projecting my benefit to be without any further increase of any future earnings.
So it's sort of a case of garbage in, garbage out.
So you just have to know. You can also run the system the first way. Run it with either zero or your current earnings. And then it'll ask you if you want another estimate, and you can say, yeah, I want to retire at a specific age, 58, 59. And so if you put in a retirement age, so then it will cut your earnings off at that age.
Oh, okay.
But the only benefit they will project at that point, where before they did 62 full retirement age and 70, now the only one they're going to do is if your retirement age is prior to 62, they're only going to give you a 62 number. If it's between, then it'll give you.
Okay, yeah,
that's going to be limited, but it gives you an idea,
and it gives you
a starting point for your planning process,
which is good to know. Now, you mentioned a moment ago about somebody who got an extra check from Social Security.
Yes,
they had gotten.
Well, they had their benefit recalculated because they had good earnings.
Yes. Now, you also said earlier, if you're not working, you can take it as early as 62. So the question is, can I get a Social Security benefit even while I'm working? And there is a yes with an if or a no with a but.
If you are under full retirement age, work can have an impact. Continue earned income.
FICA.
W-2 wages where you're paying FICA. Self-employment income while you're paying self-employment tax. If you have earned income and you're not full retirement age, there are some rules you have to live by. Certain amounts of income. Right now, if you're under full retirement age for the entire year, if you're making $19,000 or less, you're not going to have any issue with the Social Security. They're going to give you your whole Social Security benefit. You're entitled to receive the entire Social Security benefit, even though it's reduced because you're not full retirement age. But if you go over that roughly $19,000 number, they're going to say, well, wait a minute, you're not retired. You're not entitled to the full benefit. And so what they'll do is they'll look at whatever your actual earnings are for the year versus the threshold for the year. And for every $2 over the threshold, they want $1 of the Social Security benefit back.
For every $2 that you earned
over the threshold,
which is what again?
It's roughly $19,000.
Okay, yeah.
For under full retirement age for the entire year,
and that goes up. They raise that number a little bit.
It's got a cost of living adjustment to it, and so if I'm making $50,000, what's that? $31,000 over the limit.
Mm-hmm.
That means $15,500 of my benefit they want back.
Which may wipe out your entire benefit in some cases.
And what they do is when they send you the notice, you either write them a check or they just stop paying you. And when you are eligible to receive a benefit, they'll still not pay you until they get their money back.
Now, does that mean that money is gone? That just because I was working, I lost all of that?
No, you didn't lose it, but it's as if you hadn't applied for it.
Mm-hmm.
And so when you become eligible for it at some later date, it's as if you applied for it at that age, so it's not reduced as much. For somebody whose full retirement age was 66, if they take it at 62, they're only getting 75% of their benefit. And so if I take it at 62 and I have to pay it all back and I'm not eligible until I get to 66, when I restart my benefit at age 66, my full retirement age, I get the full benefit of 100% rather than the reduced, because I didn't take it early because I paid it all back.
So if you live long enough, you'll get that money back.
I don't want to say you're going to get that money back.
You're not going to be losing.
But it's all a matter of entitlement. You are not entitled to your full retirement benefit if you're not retired in their definition. Retired in their definition is making less than 90. Now, there's a weird one that happens in the year that you reach your full retirement age.
So if my full retirement age is 67.
Right.
If I retire in the year that I turn age 67.
Right. My full retirement age is 67 as well. My birthday is in June.
Yeah, let's use you. Yeah.
I'm right in the middle of the year, basically.
Yeah.
And so the year that I reach full retirement age, the number is different. It's like $50,000 of earnings.
So you can earn a whole lot more during the year that you turn your full retirement age and not have to give back that Social Security.
And the other caveat, well, there's two other sides of it. If I do exceed it, my give back is one for every $3 I'm over the threshold.
So you're giving less back if you exceed it.
And they're actually not looking at the entire year. Whereas all those years prior to my full retirement years, they're looking for, did you make more than $19,000, give or take, whatever it is, for the entire year? In the year I reached my full retirement age, did you make more than the threshold in the months prior to your full retirement age? To the month you so let's say I make $65,000 a year, $70,000 a year, 35 in the first half, 35 in the second half. I could start receiving my benefit in January and then hit my full retirement age in June. And because I haven't earned $50,000+ in those 5 months, I don't have to give any of it back. Even though for the entire year, I'm going to earn way over the threshold.
Well, yeah, and then once you hit full retirement age in June, in your case,
now they stop counting.
You can earn as much as you want. There is no give back.
Right.
You can take both.
That's just a small. You just have to know the numbers. If you're working and you're making a reasonable amount of money, and you're under your full retirement age, you're probably not going to get your Social Security. And it's a rude awakening when they say, we want it back.
Yeah, because they may not find out about it.
Yeah, they probably won't find out about it for a couple of years when they match up, the W-2s.
They'll say, we overpaid you because you're working.
They're saying, wait a minute, we started paying them 2 years ago, Social Security, and we have W-2s for these years that say they made $80,000. You weren't entitled to that money you got. Oh, and if you had a spouse that was receiving a spousal benefit, they don't get that. You have kids, you had kids later in life that were receiving benefits, they want that back too, because if you weren't eligible, anybody who's receiving a benefit based on your work record isn't eligible.
So you either write a check right now,
or they just withhold it when you are eligible for it for a period of time.
Yeah, and that's not a whole lot of fun. If you didn't count on that, it could put a crimp in your plans.
And I'll tell you one little thing. If you're still working and you're receiving a Social Security benefit, it's very highly likely that some of that benefit was taxable. And then paying it back and trying to get a credit for those previous taxes you paid on the benefit that you received that you had to pay back, that's why accountants have jobs. That is a nasty situation.
But you're entitled to get those taxes back because you weren't supposed to.
But the form stinks.
Oh, I'm sure it's awful. Yes, hire somebody to do that. You mentioned spousal benefits. Is there a somewhat easy way to explain how the spousal benefit works? Because as I understand it, your spouse can receive a benefit even if your spouse never worked. And this goes back to the days
more traditional family
when the husband back in the 30s and 40s and when the husband is what it was back then in the 50s would have a benefit and the spouse would be home. The spouse never got a benefit, but they started adding a spousal benefit.
They added a spousal benefit in the 50s. And,
so how does this work?
Well, if you're married and with a very small caveat, I can't think of any reason right now. If the worker is receiving a benefit, if the worker is at least 62 and has applied for their benefit, and the spouse is at least age 62, they may be entitled to a benefit, or they probably are entitled to a benefit. The benefit could be as much as 50% of what the worker is receiving, but it depends on when the worker started receiving and some other issues. But what they're going to do is they're going to look at your own benefit, the spouse's own work record. Do they have a benefit of their own? And they're going to look at the worker's record. And I'm just using these two, and they're going to say, okay, which benefit is higher? And so they'll give you basically what happens is they give you your own benefit, and then they give you a supplement up to the spousal benefit if it's higher. And so it's as if you're receiving the spouse benefit. The spouse benefit, if the spouse is full retirement age, they can get a benefit equal to 50% of the worker's full retirement age benefit.
Just use some numbers here for illustration.
The worker, in this case, is getting a $2,500 a month benefit. If the spouse waits until the spouse is full retirement age, they will get a benefit equal to $1,250, half of what the worker was
receiving. And it
receiving.
could be whether they worked or not.
Well, regardless whether they work. Now, if they had their own benefit of $800 a month at that time,
if the spouse did, yes.
If the spouse did, they'll get their $800 plus $450 of a spousal benefit, bringing them up to the $1,250.
Yeah.
Now, it's a curious issue. It's not always half in that case, because let's say that the worker started receiving their benefit at age 62.
So the worker took a reduced benefit.
Right. They're only getting 75% of $1,275. Was that $825 or something like that?
Whatever.
I can't think of them. $875. Well, when if the spouse doesn't apply until the spouse's full retirement age, they're getting 50%, not of what the worker is actually receiving, 50% of the worker's full retirement age benefit. So they're still going to get their $1,250, even though the spouse or the worker's only getting like $2,000 or $1,825, $1,875.
Yeah.
So they're getting more than 50%. On the other side, if the spouse waits until, or the worker waits until age 70 to take their benefit, and they're getting $3,500 a month, the spouse is still only going to get 50% of the worker's full retirement age benefit. So the spousal benefit is always based on the full retirement age benefit. It's scaled back if the spouse applies prior to age to full retirement age. But it doesn't go up if the worker waits. It doesn't go down if the worker takes it early. Yeah. It's based on the age of the spouse when they apply.
But as we said, the important information is that there may be, for certain people.
Oh, in many cases, yes.
And the less that the spouse made, the greater the benefit.
The greater the spousal benefit.
The greater the spousal benefit. Up to 50% of the worker's full retirement age benefit. They're connected in that way, but they're really not connected. It doesn't matter if the spouse, if the worker is taking their benefit, can the spouse take a social, let's say it's a husband and wife, okay? Let's say the wife stayed home I know that's old hat, but let's just say, though. So let's say the husband decides, I'm not going to take my benefit. I'm going to wait till 70. But the wife who's been staying home and wants the spousal benefit says, well, heck, I'm 66. That's my full retirement age. I want a benefit. So can I please start taking my benefit while my husband waits for his to grow to age 70?
Back in the old days, prior to 2015, 16.
Not that long ago.
Yeah, we were able to do something in that respect. But unfortunately, according to Congress, we were getting more money than they thought we were entitled to. I can't remember the exact wording.
Than they had intended us to have.
Yeah. Back in the old days, you could do something about that. Now, the only way to get a spousal benefit is for the worker to be receiving their benefit.
Not just having applied, but to be actually receiving their benefit.
Yeah, back in the old days, prior to 2014 or so, the worker could file and suspend their benefit at full retirement age. And because they'd filed, then their spouse could get a benefit. They took that away from us. We do not have that anymore. So for a spousal benefit to be paid, the worker has to be receiving a benefit. Had a question on that this morning. Somebody was talking about, why are we not taking why am I not taking a spousal benefit? I was born before the cutoff, which was born before January 1st, 1954. And how come I can't apply for a spousal benefit? Because your spouse is working, your spouse is 65, your spouse is not receiving a benefit. Because your spouse is not receiving a benefit, even though you were able to get a spousal only without applying for your own, she'd have to be receiving a benefit. She's not receiving a benefit.
Yeah. So just know that the if you want to get a spousal benefit,
pretty much your spouse has to be receiving their own benefit
at that time. Yeah.
Your working spouse.
So to recap here, when you're eligible, most people are eligible at age 62 to receive some benefit.
A reduced benefit.
A reduced benefit, but age 62 is the earliest, and it will continue
for retirement benefits.
Yes. I'm speaking strictly about retirement benefits. Not widow's benefits and not
disability, not
family,
survivor.
Yes, or survivor, right. And it will continue to grow. If you wait, your benefit will continue to grow all the way up till you hit age 70.
Yep.
At age 70, if you haven't started taking it yet, your benefit will not continue to grow. You can't wait until 80 and get some monstrous.
Yeah, it's not going to grow at 8% a year all the way to 80.
No, it's 70 is the latest that you can get.
That's when the delayed retirement credits stop.
You're eligible based on the benefit is calculated based on your top 35 years of
to get
FICA
a benefit,
taxed earnings.
To get into the game, you have to have 40 credits, and you can only earn 4 credits a year. So you have to have 10 years worth of earnings paying into FICA just to be able to get in the game, to get any amount of benefit.
That's your ante to get into the. You have to ante up with 10 years of.
But that's
earnings.
not how they calculate the benefit. It's not like, well, you worked for 10 years. We're only going to average your 10 years of earnings. The benefit is based on the best 35 years, regardless of how many years of earnings you have.
Yeah, so they'll go back, they'll take all of your years where you worked. It could be 45, I don't know, but it could be a lot. And they'll rank the top 35. And they'll say, well, some of these lower benefits, were earned years ago. We've inflation indexed.
Oh, yeah, the inflation index, and then they line them up highest to lowest.
So that's how you're eligible. That's how your benefit is calculated. Top 35 years. It doesn't matter if later, if your last couple of years, between age 63 and 66, you only worked part time and you had very little income. That just won't be part of the calculation.
Maybe it's not part of the best 35.
Right. So it's not going to hurt you to earn less as you.
Now, just to make it worse, you may have only worked 10 years in the system, 15 years in the system. But you had really good earnings years. And Social Security is skewed to the lower wage earnings. But you also had a different career. You work for a municipality. You work for a school district, one of the 11 in the U.S., 11 states in the U.S. When you get that projection of what your benefit is, it may not be true because you may be subject to the windfall elimination provision or the government pension offset, and that's a whole different game.
It is, and we've done podcasts on that. You can search that as well. It may have been the last time when we were talking about how much do you expect to get.
So if you had a job where you did not pay into Social Security, but you also had a job where you did pay into Social Security, when you run the projections, just know that that's not the right number for you. Oh, by the way, it won't be higher. It will be lower.
It will be once you ultimately start receiving it. Yes. You can get your Social Security benefits if you work. You can get your full Social Security benefit if you're working beyond your full retirement age. Once you hit full retirement age, there's no limit to the amount of earnings you can have.
And that's a change from about 20 years ago. About 20 years ago, right around the 2001. It used to be that there was that 1 for 3 went all the way to age 70. And then they said, well, we're going to back that off and say only to full retirement age.
Wow, that's kind of like it's not a benefit increase, but it is in a way.
For some people, it helped.
That's not bad. For once, they're not trying to reduce what we're entitled to. And we talked about how the spousal benefit can work. A spouse who does not have any work record at all,
right? And it's
can
not
get
just
a benefit.
Spouses. If you are somebody who had kids later in life, or unfortunately, we've seen it where they've had to adopt their grandkids. Or they become the guardians of the grandkids because their own kids passed away, or whatever reason. If you have dependent children under the age of 18 and you're receiving a retirement benefit, they can get a benefit too.
Yes, we've talked about family benefits.
That's part of the family benefits.
People who are, 65-year-old who maybe takes legal guardianship of a grandchild, or they happen to have kids of their own.
Later in life.
A child of a... Let me just ask you this one last thing. If you marry somebody who has a child from a previous marriage,
unless you've adopted them,
they have to be your legally.
You have to be a legal dependent.
A legal dependent. You can get certain family benefits. So that kind of answers, I think, a lot of the common questions. There are more than that, but that's about all we have time for. If you need to know more about when you can take Social Security, when's a good time to take Social Security, we have podcasts on that as well. As I said, we've talked about things like the widow's benefit or survivor benefit, I guess we should call it. What happens when you have two people with a husband and wife, or two spouses with a Social Security benefit, and one of the spouses dies?
What continues?
One of the benefits will continue. It's going to be the higher of the benefits. And if you have two spouses with fairly equal benefits, you could stand to lose almost 50% of your Social Security income.
Yeah, if you have, in that case, I've seen some people that have very good benefits. They both waited until age 70. They're both receiving like $4,000 a month, so they're getting a pretty healthy Social Security benefit. Both, if one of them pass away, they lose a big chunk.
They're going to lose just about half. Yeah. It could be.
But you can guess also, because they have such a high benefit, they had a fairly high income, both sides, they save quite a bit.
Well, that's probably true. I think when you have two people with not such a high Social Security benefit, maybe, a couple people, spouses with, $1,000 a month, and one of them dies, they could lose
a third.
It could, yeah. So that's something that you need to be prepared for, which is why you talk to people like Professor Plum or any of the Lucia Capital Group advisors about this. Social Security is one of the top topics, most asked about topics for a financial advisor, because, again, Social Security is one of the foundations, is what it is, and it provides a foundation for an entire portfolio. How much guaranteed income are you going to get?
Well, how much do I need to take out of my portfolio? What other incomes do I have? The first income that comes to mind for most people is Social Security.
Social Security. So it's an important part of the planning process, and it's important that you understand what your options are. Are you eligible? Did you know that there may be a government pension offset or windfall elimination provision? Did you know that if you're continuing to work, you're not eligible for your benefits if you're right, exactly. So this is why you talk to a financial advisor. Professor Plum, I know you've been studying all this Social Security stuff for a long time. There isn't much you haven't seen with regard to Social Security and with regard to planning. It's a pretty good bet that you'll be able to at least give somebody all of their options.
I did learn something a couple of years ago that I didn't thought, and it had to do with that earnings test. If I'm working, I'm 63. I want to retire when I'm 63, and I work half the year, but I want to retire in June, July of that year. Well, I make $100,000 a year. I made $50,000. That's well over the $19,000 limit. But I retire, and then I apply for Social Security.
Yeah.
The annual rule turns into a monthly rule, and as long as I don't violate the monthly rule, which is 1/12 of the annual rule, I don't have a problem. But if I violate the monthly rule even once,
yeah,
just once, it goes back to an annual rule.
It goes back, and then
but it's for, because people will say, well, if I can't earn more than $19,000, that means I basically have to retire in January.
Well,
no, that's not the case. You have a one-time change of the annual rule to a monthly rule.
Yeah.
And if you really are retired in the months that you're receiving your Social Security and you don't have any earned income, there's no give back.
Sure, there are plenty of people who work and make a good salary all the way up until October or November and make far more than the $50,000 or whatever.
Or I'm thinking more of the years prior.
Or the years prior. Okay,
where it's only 19,000.
Yeah, they make far more than that, and that's not going to be a problem. But this is why you talk to an advisor like Professor Plum. 800-644-1150. The number at Lucia Capital Group, 800-644-1150. Get in touch with any of them. The plans they put together, they all go through Professor Plum, the Chief Financial Planning Officer for Lucia Capital Group. And they can talk to you about things like your guaranteed income, Social Security. How much Social Security are you going to get? How much are you eligible for potentially? And what are the pitfalls? 800-644-1150. Go online as well, luciacap.com, LUCIACAP.com. We got all kinds of videos and, as I said, blog posts, and you can listen to our past podcasts. Go to Spotify. You can subscribe there. All kinds of answers. If you've got a financial question, check it out, the Lucia Cap website, or go to Spotify, and you can probably find something close to your answer right there. That's it. Out of time. We got more coming up next week. My thanks to Professor Plum, certified financial planner, professional. For him and the entire gang at Lucia Capital Group, I'm Johnny Dean, your podcast host. Thanks so much for listening, and we'll talk to you again next week.
The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. To the extent that this material concerns tax matters, it is not intended or written to be used and cannot be used by a taxpayer for the purpose of avoiding penalties that may be imposed by law. Each taxpayer should seek independent advice from a tax professional based on his or her individual circumstances. Different types of investments and/or investment strategies involve varying levels of risk, and there can be no assurance that any specific investment or investment strategy, including the investments purchased and/or investment strategies devised by Lucia Capital Group, will be either suitable or profitable for a client's or prospective client's portfolio. Thus, investments may result in a loss of principal. Accordingly, no client or prospective client should assume that the presentation, or any component thereof, serves as the receipt of or a substitute for personalized advice from Lucia Capital Group or from any other investment professional. You should always seek counsel of the appropriate advisor prior to making any investment decision. All investments are subject to risk, including the loss of principal. This material was gathered from sources believed to be reliable. However, its accuracy cannot be guaranteed. These materials are provided for general information and educational purposes based upon publicly available information from sources believed to be reliable. We cannot assure the accuracy or completeness of these materials. The information in these materials may change at any time and without notice. The information provided is based on current laws, which are subject to change at any time. Lucia Capital Group is not affiliated with or endorsed by the Social Security Administration or any government agency. Social Security rules can be complex. For more information about Social Security benefits, visit the SSA website at ssa.gov or call 800-772-1213 to speak with an SSA representative. Examples cited are hypothetical, are for illustrative purposes only, are not guaranteed, and subject to potential federal and state law amendments. There is no guarantee that you will achieve the results discussed or illustrated. Rick Plum is a registered representative with and securities and advisory services offered through LPL Financial, a registered investment advisor, and member FINRA SIPC. The investment professionals are affiliated with LPL Financial and are conducting business using the name Lucia Capital Group, a separate entity from LPL Financial.